Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode explores a new topic with a guest who brings their unique experience and knowledge. Tune in and discover something new each time you listen.
Hi, and welcome to Bank Talk. I'm Charlie Kelly, your host and partner at Remedy Consulting. Today I have with me lwilson. It's been some time since we've done a podcast on what's going on in the software industry as it relates to what the Remedy team does for a living. So contract negotiations, system selections, that type of thing. I thought I would bring lwilson on. And Lori's one of our consultants, and we're very proud of the consultants that we have. Lori's got a great background, 20 plus years at a core provider in a capacity of pricing, contracts, product, that type of thing. So really deep background in just what's going on in the software industry. So thought we'd have a conversation around the software industry and, maybe just how it affects these contract negotiations that are going on as you sign one with one of your providers. So without further ado, let's see what Lori has to say. Okay, welcome back to Bank Talk. lwilson, thank you for joining us.
Thanks for having me.
So, Lori, I wanted to spend a little bit of time today. It just seems like there's a lot of moving parts in the software industry. Everything from private equity entering the markets to what a lot of these core providers are doing, changing products out, those types of things. So I thought I would spend a little bit of time just getting your perspective on, not only how these things affect you doing your day job, but just any perspective you had from your long time, working at a core provider and all of that. Thought that might benefit our listeners a little bit.
Okay, that sounds good.
Let's start with private equity. Seems like there's a lot of private equity entering the financial services market. Now, we've done other presentations on this, and my concern with private equity has always been, is it good money coming in, and what does that do to customers? Because the private equity folks are interested in making money for themselves. They're not interested in running a better software firm, that type of thing. In my opinion, again, that might be a little bit jaded. If I were a private equity investor, I might think otherwise. But tell me if that private equity side of it has any influence on what you do for a living.
When you let the finance team run your company and they're trying to please investors, it seems like they're only worried about that short-term gain. And lately, we've seen some of the stock prices of some of the software vendors drop tremendously. So there's some arguments that these companies were only focused on the short-term gain, which in the end has taken a long-term effect on the companies themselves, and it has also hurt their customers.
Yeah, that's an interesting perspective. I think that, you and I have always talked about this, right? Like in my opinion, finance companies have been running some of these big providers for some time. And unfortunately, I think whether you're public and you have that sort of 18-month outlook, or now with private equity, I would argue that the longest hold period for a private equity firm is maybe 5 years. So they're, oddly, I think they're even maybe more aggressive than some of these bigger guys in that, okay, finance runs a company, because if we don't have finance running the company, we're not going to make the money we need to. But you make a really good point on a couple of very large software firms have taken a nosedive, and I would argue that their customers over the years probably could, I don't know if they could tell that the stock price nosedive was coming, but they certainly would say it feels like you degraded the company, the customer experience, customer service experience.
Correct. I think that's what we're seeing a lot of, is that the customers are having the issues. And, it's really hard to listen to them when they start telling you about all the issues that they have. And that the main reason that they're having these issues are because those core vendors are chasing higher stock prices. They're not concerned, about what's going on in the company. They're just totally focused on the money.
Right. And the moves I think that we are most concerned with are probably staffing. So I would say staffing, where staffing hits you. Well, as a customer, you don't always know, right? Like you don't know whether they have 8 people waiting to support your product or two. But the simplest example I can give is in our space, we felt like some of these firms have cut the operational team, and the operational team might be the people that knew something about pricing or the people that knew something about how to put a proposal together or how to balance what a customer pays versus what they think they're telling them they will be paying, right? Like just kind of what we would call block and tackling back in the day. If somebody says, could you give me a proposal for the next 5 years? If the starting place is meant to be what you pay me today, it can't be off by 30%. In nobody's mind, does that make any sense? But those are some of the mistakes we're hearing or seeing. And I would argue that somebody got fired at the provider that knew about this stuff and now is gone, right? And
Right.
now maybe eventually they replace the person, but they're not going to replace them with somebody seasoned enough to at least just know what blocking and tackling means and some of the company history and all that kind of stuff. So
Yeah,
I don't know, unless you have other opinions on things that you're seeing internally where you could kind of point to, hey, this feels like a finance move, not a good move for the customer.
correct. And I don't think the banks really understand all what went on. I think you had to be inside the company at the time actually watching it. But I mean, staffing is a huge issue in all areas once they start chasing that dollar.
Right. I want to jump back from sort of big company to private equity, right? Because is there anything specific? So let's use an example of I can probably think of 5 or 6 firms that recently took a private equity investment. Give us a few things that you're seeing in the contract world, specifically related to, where you can kind of go, boy, this smells private equity to me. Are there any moves specifically that any of our listeners should be aware of when this company has suddenly taken private equity money that you might expect that they would see within the next contract negotiation?
Yeah, I think the first thing would be short-term contracts. They're not interested in short-term contracts. And if you do want a short-term contract, say 3 years, it's going to be hard to get the vendor to negotiate pricing. And usually, when you end up in your terms, you're going to see some large annual escalators. So the annual increase every year is going to be higher than a normal 5 to 7 or 8 year contract.
Yeah.
They just don't really want to deal with them, so they're just kind of cutting them off.
Yeah, and I would
Um,
say what I've seen there, just to reiterate your point, when you work for a large software firm, they will take as long a contract term as they can get, right? Like I've never heard somebody that says, "Would you like a 5 or a 7?" and the software provider did not say, "Give me a 10," right? They always wanted a longer term, unless the only reason they might take a shorter one is maybe somebody's commission schedule didn't, like they didn't get paid for years 7 through 10, right? And in which case, I think the interest drops off internally inside the firm. But what the odd dynamic that I think you're talking about with these 3 year contracts is now you have private equity firms that have come in and said, "Oh no, just give me a 3," right? So all of your alarm bells, my alarm bells start going off. I would think, right? Like why a 3? I think what you're relating to is they would only take a 3 for a couple of reasons. Number one, they don't care beyond year 3. They're not going to be there that long, right? Or they just figured out a new way that they believe they can increase the revenue,
right.
right? So now you
Right.
get this short contract with escalators, with pricing escalators, and then all of a sudden the contract ends, year 3. They're pretty sure you're not going to leave. And even though they've gotten you for CPI over the first 3 years, now all of a sudden there's a 50% uptick in the next year with an excuse, and the excuse sounds the same. If once you've heard it across 3 banks or 3 credit unions, you've heard the same excuse. So they've got a script, and so that's a unique way for I think these private equity guys to improve the financials. And I mean it was something that most of the large software firms either aren't gutsy enough to do, or they know that they're there for the recurring revenue. And I think the private equity firms might be there for the increase in recurring revenue.
Right.
Does that make any sense?
Yeah, that does.
Gotcha. Okay.
Yeah.
Anything else in the private equity firms or any of these short-term decisions that you wanted to talk about?
Yeah, I mean, you have the increased exit fees, and this again ties back to short-term gains. The company see these termination and deconversion fees as large revenue, and it hits their books immediately. So it's kind of like they're getting 2 to 3 years of monthly fees all paid at once. So they make those exit fees super high, so they get that money right away. So we're seeing a lot of that.
Yeah,
Uh,
and I would say the same thing probably in early termination fees. I've seen some firms that just say, no, right? We won't do those. And I guess if you're doing a real short-term contract, no is probably not a terrible answer, but when it starts to get to be these longer term ones, that's a that's different than the we would think of the universe in the old days, right?
right.
All right, Lori, let's move on to digital. If you go through the publications out there, everybody's talking digital. And I think in reaction to that, the cores in many scenarios are replacing their digital product. Now, over time, I think all the cores are upgrading product. Like, they may be adding functionality to their product, but we're seeing this shift to sort of I'm taking the old product and I'm sunsetting it and I'm replacing it with this new product. I wanted to just get your perspective on that and, what you're seeing there, why it's important. I know it's hard to do, right? It's hard to, start a full implementations project to take somebody off of product A and move them to product B. But just give us your perspective on what you're seeing, what clients should be looking out for, that type of thing.
I would say that the cores are trying really hard to make their digital offering competitive. They have to make sure that their digital package includes all the bells and whistles and all the cool functionality that everybody's looking for these days. And if they don't have it today, I think they need it to make sure that it's on their roadmap for later. After you get your new product actually ready, where it's ready for market, then you have to decide how to get it out to your clients. And then you have to decide how many clients are going to actually want to move before all your bells and whistles are available and till all the functionality that they have today is actually available.
We'll be right back.
Ever feel like your tech budget's running the show instead of supporting it? You're not alone. Between bloated vendor contracts and outdated systems, a lot of banks are stuck paying more for less. And here's the kicker. Those big tech vendors, their contracts are built to protect them, not you. So if you're hesitating to make bold moves because of tech costs, it's time to flip the script. That's where Remedy Consulting comes in. We help banks take back control, cutting through the fine print, optimizing spend, and finding tech solutions that actually fuel growth. And we're offering a free review of your tech stack, spending, and vendor contracts. No pressure, no sales pitch, just expert insight to help you make smarter decisions. Even if we're not the right fit, you'll walk away with clarity and confidence. So go to remedyconsult.net or call 206-295-5776. Let's make your tech work for you, not against you. Thanks for listening to the BankTalk podcast.
Yeah, I
And
think
then,
that's a good perspective. One because think about it from a client's perspective. The client might have wanted it 2 years ago, but now you've got this migration path of I've got to move all of my customers on this current product over. And I would imagine that really causes some disruption in their implementations chain and all the things that have to go on. I think your perspective was if there's an early customer that goes on, they may be in beta, right? They may actually just get a beta product and they've got to decide how desperately they want it based on how they feel the current product is failing.
and how disruptive that's going to be to their clients, a beta program.
Absolutely. Right. And then by the time they get the last client on, it might be years later. So now all the functionality is built up, but now you as a customer have had to wait. I mean, that to me is just the nature of a big operation like this with a lot of customers on a current product. standing up and saying, this product is not good enough for the future. I'm going to move to the new one. Anything else in there, just from how to get this done at the core provider? Anything else that jumps to mind?
Yeah, I think the core provider has to take into effect, how long it's going to take each to migrate each of their clients. And then if they have thousands of clients they have to migrate, how much bandwidth do they need? Are they going to have to hire new people to help with this migration? And all of this leaves the door wide open for these third parties to swoop in and take their customers. I mean, fintech see this as a great problem. They have an opportunity to get in and get these new customers away from these vendors. So,
Yeah, that's a great perspective. Yeah, and we're seeing it all the time, right? And I think the bank or credit union's got to make a decision. And it's not an easy decision because they really don't, they may or may not know the timeline that they're under to get the product. That implementation schedule is a moving target. So it's very difficult to communicate as a core provider that that's even happening and when, XYZ Bank might end up on the product because schedules change, things move. They can give a range probably is probably the best I would say. And that I absolutely agree that leaves the door open for a lot of, fear and anxiety is the perfect thing for a salesperson, right? Sort of.
yeah.
So I think that's what's going on out there. So now let me ask you the contract side of that question, which is, so let's say you are a bank who has decided to take the product and you're comfortable with either the implementation calendar or you know that this is the product that you want. Give me the kind of the puts and takes contractually for what you're seeing. We've kind of heard of the operational difficulties. What's the contractual difficulty of a core trying to get this thing done?
Well, I think you have to look at price. Price is a big deal for banks. So you have to decide, what's the bank willing to pay? So let's say a bank says they can pay $6 per digital user and they feel like they can recoup that money in revenue. So $6 might actually be competitive for a core provider. But if you're a bank under $1 billion in assets and some of the digital standalone products, they might cost you 3 to 5 times that amount. You got to add in integration fees and core vendors. When you take their digital customers, they tend to charge large integration fees. So, I mean, not only that, when you add in a third party, you also have the headache of having to figure out who to call when an issue arises because now you've got two different vendors.
No, I completely agree. I think that the concept of making sure you understand your costs. We always said with some of the products that are out there that are core agnostic, if you understand what that word means, right? We always said some of them only work if you're over a certain size. In other words, we at Remedy always think, okay, let's use your $6. I know the $6 was just a number you made up, but let's just say the $6 per user is kind of what you think a digital user is worth. If you're small enough and, kind of using that 3 to 5 times as much, the overall bill per customer might be 3 to 5 times what you were paying before. So I guess the bottom line is, in just kind of reiterating your point, is some of these products are only built if you're big enough. Like you should not take them. And I think a lot of times our customers don't really know how to do that analysis. They know what the bill's going up, but they really don't know what happens if all of a sudden they grow the number of clients that are on the product and all that kind of thing. Just sort of that what if analysis type of a thing. So let's just say that you decided to take the current product, right? You decided to say, I am going to stay with the core. I had product A. I'm going to get product B. Anything going on there as far as contracting for it, related to timing of the, of what contract that initial product is in and the new product will be in?
Yeah, I think the thing that we see the most these days is they get you in and they put the fees in for this new product. And then depending on which is more expensive, because it doesn't necessarily mean that you're going to be paying more when you go to this new product. It depends if you're paying more, if you're overcharged right now, then you
Yeah.
might be actually
So
paying
if
a
you,
lower fee. So you
okay.
kind of have to watch the language because sometimes the language states that you will keep paying the old fee until the term runs out. And that
Mhm.
could be that you're paying a higher price.
In a scenario where you're going to replace it, just be aware of when you think you're replacing it and when exactly that pricing kicks in. And
Correct.
just make sure you got a pretty good understanding of sort of before, after, and when the price migrates, because keep me honest, but the price migration might be at a different time than the actual migration.
Correct.
So we've
Right.
seen some scenarios where it's going to kick in by, February 1st of 2028. Now they haven't said the product will be in your hands, right?
Right.
That's just such a, I mean, I guess they've got to have some cutoffs just to make sure you understand and are in control of what happens if the product's not there, but the pricing kicked in.
Right.
That type of thing. Yeah.
That's the flip side. So if the product that you're purchasing is going to be higher priced than the one that you use today, then they tend to put in a date, like a random date, whether or not you have the product or whether or not all the features are available at that time.
Hmm. Yeah. Talk a little bit more about those features because I think that's really important. Is you've got product A today, and product A may have 35 features. Product B is being developed and may have 20 of the same features, but a bunch of new ones, right? But what about that 15 features that got, that sort of are, maybe some of those are important to you. Just give a little more clarity on that piece of it.
Yeah, I think it comes to, what you need. You look out to see that at least your basic functions are in there. And hopefully they're the ones that you use today. But, there are some people or some cores that are looking to make their products fancier and more eye appealing and kind of have forgot to put in all the stuff that the bank is actually used to doing and the functionalities that they actually need every day. And so you kind of have to look to see what is actually out there today and then get an understanding of what's on their development roadmap just to make sure that everything's going to be taken care of. And you definitely don't want to go if you need certain function that's not available today. You want to wait to migrate until the functions that you actually need or your clients, your customers need. You want to wait till those are available before you move.
Yeah, it's a good perspective. I mean, it's just like the same concept of if you were going to replace the product, like don't sign up for something if you don't know it's there, right? Like I would say the biggest reason when you're doing an RFP for a digital product, the biggest reason a potential customer may wait around to migrate is that they would basically like to find another bank that says, "Oh yeah, the commercial functionality works fine." Right? I'm just using an example, but the commercial functionality, we were missing three things when we talked to you last time. Now we feel like they put it in there and it's good to go. I don't think that decision's any different whether you're migrating a product that's, kind of within the same core or picking somebody else's. I think you got to have that conversation. And, contractually, like don't let them sign you up for something that you have to migrate by a certain date. We've seen that clause. You must migrate to this product by ABC date. And that's a
Correct.
scary clause because to your point of functionality, who knows what's there at that
Right.
time? Like, what does that even look like? So, okay. All right. Well, that's great. No, I appreciate that. It's pretty good perspectives on everything. Okay. I told you I'd give you one shameless plug. You do this podcast for me. So I'm on to my next question. Today, I had a client that told me that they were so close to their software provider, they want to manage negotiations themselves. What advice would you give that person?
Well, in my time negotiating contracts, and I've done probably around 3,000 pricing and contract negotiations. And in my previous life, we kept track of a lot of financial drivers. And I honestly cannot say that I've seen any correlation between a good relationship with your account manager and a really good price or contract terms and conditions.
Yeah, that's a good perspective. And I would say the same thing on my end. I've never seen a, that's not a driver.
Yeah.
Bob and the account manager, Bob from the bank and Sally who's our account manager, have a good relationship.
Yeah.
I don't
I
think
actually would say it's a huge negative because
I
really and truly, you have a good relationship with someone. I think you don't want to hurt their feelings. You don't, I think it would just hinder your judgment in the whole thing. So, and when it comes down to it, I think you have to always remember that your account manager actually works for the software vendor. So he has a fine line. His job as your account manager is to help you if you have issues or if you need to purchase something or do a renewal. He's there to help and help you, but he's your liaison between service and finance. But in the end, they all still work for the same software company. So they have to do what's right for the company, not always what's right for the bank. So,
Yeah, that's a good perspective. And I would argue I don't know too many account managers that know anything about pricing either. If you're not whining a little bit about it, there's no reason for them to look into it. They would assume that you're fine, right?
right.
And yeah, I mean, I can think of a few examples. You probably have more than I do, but of customers who were best buddies and didn't want to insult them. And I guess it does make sense, right? If you're picking a consultant, you've got to make sure they're a soft enough touch because there's plenty of consultants out there that are screamers and jumping up and down and whatever. And that is not going to help a relationship that you feel close to. But, somebody who's adept at it and also knows the dollars, I think is pretty critical because you want to keep the relationship when it's all said and done and you don't want any bruised egos or feelings or whatever. We've seen kind of the opposite of that, which is the friendliest one is the one that's charged the highest amount. And that's never good. Then no matter how soft you treat that negotiation, it might, sour the relationship a little bit because somebody's been overcharging somebody compared to what the rest of the market's paying.
Yeah. We actually have a client that we've worked with. He had been in the bank for years. They had been with their same software vendor for over 30 years. And he felt like he had a wonderful relationship with most of the account managers that they had had over the years. And he had decided that he was going to do some client references and check out some of the software, talk to some of the bankers. He felt like he was ready to go and negotiate with his account manager. He felt they could do it together because he knew him really well. And his board decided, kind of talked him into using a consultant for due diligence. And it ended up that, they were paying quite a bit over. So he knew they were overpaying by a little and he expected to get some off, but he never imagined in a million years that they were overpaying by so much. And I know, as you can imagine, he was shocked and upset all at the same time when he realized how much they were overpaying.
Yeah, I think that guy even had a family member working there or something, didn't he? Like it was
Yeah,
yeah, that was a very strange one. And again, that again cements the relationship, I suppose, but probably comes down to what we always say, which is there's really kind of few pricing people that really understand pricing in any of these organizations. So the organization says, well, that's a good relationship. We've always been okay. Like there's not many of them that can do a deep dive and go, hey, Bob's overpaying, right? So
right,
I don't know that it's anybody's fault within the core or the software provider necessarily, because unless you would take it to the analytics team and really look at what he's paying, and why would you, with the relationship being pretty good, why would you do that? Unless
right.
somebody's forcing you to. So
Yeah, I
all
mean,
makes
you
sense.
just don't know what actually is good unless you've actually had the
Kind of the due diligence review, you're saying that
yeah.
type of thing. Yeah.
Yeah, and unless you've been able to see how it all works. So once you've been inside a finance team for a core vendor, you know how it works, how they play the games. And
Yeah, make their decisions and all that kind of stuff, I suppose, right? Like, I mean, unless you've been there, it's really hard for you to say account manager walks it over to 4 different business units. You know what I mean? Like all that goofy stuff that you learned over the years in working for
Yeah.
one of these folks is if you've never been there, you don't even know the best way to get it through. I would argue a lot of account managers these days are changing jobs. So now you have that sort of, what do you call it? Sort of historical knowledge of the organization. There's a word for it. I can't think of it, but
Yeah, that's
right,
all
like,
gone.
yeah, you kind of lose that, right? With somebody that's new. I mean, I can't think of all the number of times we feel like we're training. You use this term more than anybody, right?
Yeah,
I got to
I
go train
do.
that person to do their job at that company, which is just odd. But
Yeah.
we feel like as a consultant, we're training them to do all we need them to do to just get us basic answers. I think that perspective is great, is that it's a lot more complicated inside, and unless you've been there. And the other thing I think is really interesting is you look at the top 4 core providers and you look at how many people have moved out of one and moved to another. Like they're the same organization, so they operate the same, they kind of look the same. I don't know if I would say design, but they certainly have similar structures, and decisions get made very, very similarly. So knowledge of being internally is fairly important, I think. I have one last question for you. I wanted to talk open banking. We hit digital. We kind of talked about some of the other movements in the software industry. Let's just talk open banking. I think a lot of these providers have, whether they're being forced to or whatever, are moving down this path of we're going to start opening this up to fintechs. So in that scenario, the core can communicate with the fintech, even though, again, sometimes it might be more dragging their feet than just something they would do. And the reason you brought up the reason they might drag their feet, the reason that drag their feet is if you're not going to use, FISs, I'm picking on them, but if you're not going to use their digital product because you're going to move to somebody else's, that's going to cost them revenue. So that's why they've dragged their feet in the past. But let's just talk about open APIs a little bit. Are the cores there yet? Like, they all talk about, hey, we're gonna have a single API. Are they there yet? Right? Do they have one that everybody can write to? Like, where are we with APIs?
I think they have a good start, but none of them are there yet. But they're all working towards a single API, which is good. It's not all encompassing yet. So they still have their old batch transactions and old APIs that still run some of their old integrations. But, they're making progress and we're hoping they'll get there sooner than later. We'll hope it's affordable. That's another thing you look for. I think the main thing that you look for is that you want your technical people inside the bank to know if they're using an old interface or a new interface. And if you decide that you're moving to a third party, I think the main important thing is to get a reference and make sure you talk to other bankers that actually use that specific third party product that you want to integrate to your core and make sure that it's all working. And then finally, you want to make sure that you know all your costs for the integration because you're going to have integration fees on the core side, but you're also going to have integration fees on that third party side. So you want to make sure you know all your fees.
Yeah, that's a good perspective. I think the use case that I can think of in my experience would be, let's say you're moving, so you've got a digital product and you're saying, I'm going to migrate digital from my core to another provider. Well, that sounds easy, but it's not because now you have bill payment, which might be a third party provider. You may have a separate mobile app, depending upon what you're doing with mobile capture. So what sounds like a single API and a single vendor, right, might be multiple. In other words, maybe I got some commercial part of the app. Like every one of these applications has tentacles out to other applications. And
Right.
I think the complexity when you go do an API and you say, okay, I just want to plug this thing in, is the bill pay API a different one than the digital one? Oh, that's a very simple example,
Right.
but now
Yeah.
take that times 7 or 8 products, sub products or whatever, right?
Yeah.
I think that a lot of times we've seen the account manager. So you say, okay, I'm going to do this replacement. I think we've seen the account manager has a hard time going within their organization and figuring out this specific application you've decided to pick. First of all, finding the right technical person that says, do we even tie to that thing? Right. And then do we tie to the seven tentacles? Now they have this XYZ app, but they use this bill pay provider, which is a different one than somebody else might use. Or they've got, three bill pay options or something like that. I need product A, subproduct B, and the APIs that go with them. I think that's a very difficult thing and more, if I were to go back and look at our clients, I would say that one is screwed up more times than any. And the scenario, the use case would be you go in there and say, I'm going to replace this, and they come to you with a quote. And then they come to you with that quote, and then 5 days later they come and go, oh, but you need this subproduct and that API. Oh, but then, a few months later, another one shows up. So this sort of waterfall of fees comes out of it. And those are not just one-time fees, right? Those might be recurring fees to use the API. In your scenario where you got one new one and a few old ones, they sort of architect it on the fly. And the problem for you as a customer is you could really get pinched there. So
Right.
that's just the cost side of it, other than the frustration of trying to put this thing together, which is, I guess you just give that to your CIO and tell them not to show up anymore at the board meetings until they're ready. Right?
Yeah.
That's probably the best bet. But
We've actually had a client that signed up for one, and they were in that same boat where they signed the agreement and they got all ready to install. They started the implementation, and all of a sudden there was like 9 different things that they needed to purchase or integrations they needed to add for extra things that they hadn't considered. And all of that costs money. Imagine being that banker and having to deal with all those extra fees. He thought he was getting a good deal, and then now he's having to pay all that extra money.
right. And I think, the other one that I can think of in our history is the one that came to us. It wasn't really a client, but they came to us and said, "Hey, can you look over this contract we're looking to sign? Make sure we got our butts covered and all that." And we looked it over and we talked to them about the product, and the core. This was, I think, a core digital, but the core and the digital, in our opinion, we had never seen that configuration that they were talking about. In other words, there was no real-time API. There wasn't even a batch file that had ever been developed because nobody had used it that way. And so we brought that up to them. And now they're 5 minutes from signing a 7-year agreement. And we said, have you asked to talk to a customer? Have you asked these 5 questions? And they hadn't. And turns out those 2 products they didn't communicate. They could not use it that way. So they were about to sign a product to disengage from one product, so terminate one product and sign, go 7 years on another that didn't work. So,
Yeah.
so there's a lot of scary stories out there on that kind of stuff.
Yeah.
But
I mean, can you imagine the termination fees if they'd actually already signed that contract?
oh yeah, it's just stupid, right? But again, it just kind of shows you go, do your homework, and I think you brought up some really good questions to ask here, and I think that's important, right? Just spend a
Yeah.
little time, do your due diligence, get somebody if you need them, find a consultant if you need them, because man, I don't know what that would have been in the millions, I think. And the
Yeah.
millions, right? I mean, if you're the CIO or the COO and you sign that contract, you got to take it back to your board. How long are you employed, right?
Yeah.
I mean, it can't be long. And I think a lot of people fear, when it comes to like just using a consultant for something like that. I think they fear more going to ask the board if they can get permission to get a third, to get another opinion. Like they fear that, they feel like that's not doing their job.
Yeah.
But imagine the other side of that, right? Like this horror story we just talked about is if you
Yeah.
didn't, and the board would have said, "Oh yeah, it's fine. Just go get somebody," right? I think now you just killed your career and probably half the bank. Like you just screwed up the lives of a lot of people who are trying to get this thing in for 8 or 10 months before they figure out it doesn't work, right? And then $1 million in term fees or 5 million or whatever the number was. So a little bit of what's the old saying? A little ounce of prevention, that type of thing.
Yep. I think that's it. Do your homework, reach out to any resources that you have, or just make it easy on you and your team and hire a consultant to help with all the details. I mean, I think that's the best way to go.
Yeah, I figured you would. But but from even just your point about references, right? Don't always accept their reference. And by reference I mean, oh yes, this bank has this configuration. Don't always accept that. Make that phone call. A lot of times we don't even get people to make that phone call. Go make that phone call. Matter of fact, go find somebody that you know in your network, and find somebody that has that configuration that's not on their network reference list, and make that phone call and ask them everything that you're worried about, right? I mean,
Yeah.
that's, again, whether you call it a consultant, they'll give you that advice or whatever, or just do it yourself. But just important stuff, right? Important stuff to CYA, as they used to say. Well, Lori, thank you. I really appreciate your time here on Bank Talk. Perspective has been awesome, and really appreciate. I know this wasn't going to be your favorite thing to do, but you did a great job with it. So thanks for
Well,
joining us.
thank you for having me.
Okay, so that's it for Bank Talk. I appreciate everybody joining us today. Have a good day and keep on learning.
Thank you for joining us on the Bank Talk podcast, brought to you by Remedy Consulting. If you enjoyed today's conversation, please rate, review, and share our work with others. To stay up to date with future episodes, be sure to follow the show and turn on notifications. Thanks again, and we'll see you next time.